Hey everybody, it's Gary with D&D Realty. So I wanted to do a series on the home buying process. This will be good for you if you're a first-time home buyer or if it's been a while since you purchased a home. So when you're getting ready to purchase a home, this may sound a little backwards and a little agents some agents may disagree with me, but I'll give you the reason why after. What you should do is first go find a great agent. Where can you find a great agent? Well, you can look on social media, see who's out there providing value to you every day, every week. Maybe talk to a friend, a colleague, a family member that's recently had a closing with an agent and had a great experience. That's another way. And you may want to talk to a couple different agents. Find one that fits kind of your personality because personalities do make a difference. The main thing is you need to know an agent's your fiduciary. So you want to make sure that agent's looking out for your best interest. That is their job as an agent to look out for your best interest, not theirs. So here's the next thing. After you found that agent, ask the agent for a lender referral. And you don't want, sometimes friends and family members will tell you, oh, just go to your bank. Well, you don't want to go to a depository institution. What's a depository institution? That's some place where you have checking, savings, and other bank accounts like that. Typically, the folks there just take applications. They're not super skilled, so it's better to get a referral from your agent because they've worked with lenders. Ask for a mortgage banker or broker. The reason being, it's all they do full time and they've had a good experience. If you go to a large bank, you may not close for 90 days. Some of the big names out there, it's a 90-day close, and a lot of agents won't accept your offer if they see some of those bigger banks' names on the approval letter, unless it's with their private lending division. So just keep that in mind. Also, mortgage bankers and brokers, they have more flexibility. They may have different credit scores that are required. They may have some different programs, some things outside the box, some things that are called non-QM loans, but I'll let a lender speak to you about that. And speaking of loans, when I talk to my clients, I like to tell them about the different types of loans so that they can talk to their lender who they choose out of the ones that I give them to. Doesn't mean they have to use them. It's got to prefer because I know they close and close on time. But you basically have four different types of loans. You have a USDA loan, and there's some income limits and minimum credit score requirements on those, and that's primarily for rural properties. There's some near the Dallas area here in 2021. There's some in Kaufman County that apply, some in Denton County. As DFW starts to grow, a lot of that will go away. You'll probably find more in Grayson County, some in Collin County, but that number of areas is shrinking. And the great thing about USDA, zero down. The next one is the VA loan. Great loan, and I appreciate all of you that served. I couldn't do it. My hat's off to you. I appreciate you so much. And a VA loan, of course, is 0% down. There's some funding fees, but again, I'll let the lender speak to you about that. But a great option, and you can get the seller to pay up to 4% of your closing cost. On USDA, I believe it's 6%, but the lender can go over that with you. Next is FHA, probably the most popular loan for first-time buyers. What's a first-time buyer? Someone that's never owned a home or hadn't owned in the last 3 years. That's not a requirement for an FHA loan, but that's what technically a first-time buyer is, someone who has not owned a property in 3 years. But FHA, you can get in 3.5% down. Little easier qualification. Many people use it. The disadvantage of FHA is you have mortgage insurance up front and monthly, and that never goes away. And there's a lot of folks who use it, and they'll get down payment assistance programs, but just know nothing's free. That free money costs a lot of money. You usually have a higher rate, higher mortgage insurance rate, but those are things to talk to the lender about. The last one is conventional loan, and regardless of what you hear, you don't need 20% down to get in a conventional. In some cases, you can get in with as low as 3% down, but the lender will need to talk to you about the income limits for that. Credit score qualifications are a little higher, what's called reserves that you need, which is money that you have set aside for closing costs and so many months of principal, interest, taxes, and insurance in the bank after you paid all that. But again, the lender will go over that with you. The other thing is you're going to need homeowners insurance, and I highly suggest talking to an independent agent. The reason being, when you have a captive agent, and I won't mention names of insurance companies here because that's not my purpose, but the big names that you see advertised, they have one product. The others, the independent agents, they deal with multiple companies. They may be able to get you a better deal, better coverage. It's not all about the price. The main thing is you want great coverage. You want to know that if your home burns, that you're not having to write a big check, that items are covered, any exterior buildings are covered, all kinds of things. Have some great insurance agents I can refer you to, happy to do so. The other thing is when you're out making offers, having a good insurance agent on your side is great because they can run what's called a clue report on a property, and I'll go over that later in the video or in my series. That'll come into play when offers start being made. So once you've identified both of those, you need to know, get a ballpark idea of insurance. Once you kind of know, once you talk to the loan officer, find out what you're qualified for, you can talk to the insurance agent, find out what premiums are going to run generally. They can't tell you an exact premium, just like a loan officer can't lock a loan until you have a specific property. But that is the first thing you need to do. Find an agent, find a lender, a great lender, find a great insurance agent. Then the next step in the process is to get pre-qualified or pre-approved. Pre-approval is much better. What's involved in a pre-approval? What you're going to need, and this is required by all the investors that service the loans, you're going to need 2 years of tax returns, 60 days of bank statements or other asset statements, and all pages, even the blank ones, the loan officer's going to tell you that. You're going to need 30 days of pay stubs. So those are the things to start pulling together so that when you call your agent, you have all that there, ready to go. Makes his job easier, makes it easier. And if you're pre-approved versus pre-qualified, the best part is it's almost like a cash offer. And I'll go over the different kind of markets